What's good, everybody? Welcome to another episode of Cheef and Chart. It's your man Don Bucks. And this is brought to you by Rap and Dough. You know, the home of money conversation. We talk about all things Black wealth. This particular series, you talk about one of the solutions, closing that wealth gap, and it is options trading. So if this is your first time tapping in, make sure you hit the notification bell and the subscribe button if you want to learn about options trading. So if y'all was here yesterday, y'all know that the SPY was took a downturn, right? But before I get to that, I like to give y'all a little spiel. Man, unsolicited advice. Listen, y'all. Nothing worse than unsolicited advice, especially coming from your friends and family who don't really even rock with you like that anyway. Let's just be honest, right? You start out on this endeavor, whatever that may be. Most times, and before I get into that, this is episode Wild Cherry. Stopped out. We got stopped out. This episode Wild Cherry. Because that's what I'm achieving. Anyway, people don't really rock with you like that, especially when you done started a new venture and you're doing some different shit that you've been doing that they know you for. A lot of times they want to come with unsolicited advice. What's that? Trying to tell you what you should be doing, how you should be doing it like this, or you should be doing it like that. Mind you, never bought a thing from you. Right? When you're on the receiving side of unsolicited advice from those kind of people, it rubs you the wrong way, right? So the gem here is, don't be one of them type of people to give unsolicited advice, especially when you're not an active supporter, financially or emotionally or otherwise, of their situation. All right, so let's get to this chart. So yesterday, we seen that the MACD formed a new low. If I can. The MACD formed a new low, and y'all know, if y'all been tapped in here, that we pay attention to the MACD. We pay attention to the MACD because it is the momentum indicator. It shows us which way the momentum is going, whether to the upside, to the downside. So we like to look for momentum divergences, whereas though momentum is to the upside and a price bar shows red, that's a momentum divergence. Or the momentum is to the downside and we see a green bar, a corresponding green bar. That's a momentum divergence. So we like to look for those, right, to position ourselves for the direction that the momentum is going. So here, yesterday, which is this bar up here, because we were saying, in my stock it's different, but we were saying if it went above this, like if we were positioning for puts this morning, if this went above yesterday's high, we probably would have got stopped out. But we got stopped out of mine, right? So if you were positioning for calls here, and this retraced, because of course we look for a retracement after 3 bars in one direction. If this retraced below yesterday's low, so below here, this is where you get stopped out at, like below here. And if you were in this for calls, and this retraced below yesterday's low, right? you would have got stopped out. All right. But this momentum divergence, we see it turn down here, new low in the MACD. So we should be looking for a green bar. Probably can't see it in this daily bar, so you have to drop down into your trading time frame. I like the 2 hour, and here goes a green bar. Here's the retracement. So in order to position for this downwards momentum, we want to know how much strength is this going to have. So we'll drop down into our relatable because we need to see what's going on in these bars. So, and preferably we want to see what's going on in this green bar. How much strength, right? So, So remember, 3 bars in one direction. Look for a downturn. If it's 3 bars up, start looking for it, right? 3 bars down, start looking for a green bar to come up. So here go 1, 2, 3, here go 4, green bar, right? So here you might have another bar to go before it wants to continue down. So this is the patience that we have to wait for. We have to wait and see how much strength these 2 hour bars or this 2 hour bar is going to have. When it stops going up, that's when we're going to position and buy our puts. So this is what we're waiting for. This is that patience. When people say, oh, you need patience. You need to unpack that. What does that mean? We're waiting because it's retracing. We're waiting to see how far it's going to retrace before we enter for our puts. Right? So remember, we're positioning for the later time frame level. The later time frame level, I would be looking for this level right here, 157. So I'll probably get a 357. I'll probably get a 355 strike price 2 weeks out. Right? But what am I waiting for? I'm waiting to see in the later time, in the earlier, shorter time frame, I'm looking to see where this green is going to stop. And that's when I'll now take in consideration. That's a high probability trade. It's not 100% probability trade. It's a high probability trade. All trades have a probability percentage. We want to put the odds in our favor. We want to do high probability things only. So what I'm explaining to you is high probability things. So we want to wait. And we'll have to wait till Monday, of course, because the market is not open on weekends. So we have to wait to see how far this goes. And then when it stops, that's when we'll position for the next level down. So let's say you buy two contracts. Let's say it stops right here. Let's say it goes up and this is where it stops. You buy 2 contracts. What's the next level down? Next level down is here. Next level down is here. So I'll probably sell one of them here. How do I know this level? Because the levels that we see here are the daily levels. The 2 hour time frame has their own levels. You see here, here's a level here. Right? It's before this one. Here's a level here. Right? That's before this one. So there's an opportunity to take profit and risk off the table as it hit levels in between while it's going to the one that you positioned for in the first place. You position for the we're positioning for the 355, right? But on its way there, we want to be taking profit and risk off the table, right? I explained that in the videos prior, like how I was averaging in, and then as it starts going my direction, I'll sell one for slight profit or break even, just to take risk off the table, right? So here is that retracement. And if it goes up to here, and then this is where it stops and it turns red again, boom, this is where we'll start positioning. We'll get our put contracts. Let's say you get 2, but if you get 1, you sell at the first target, right? Because what's going to happen at the target? It's going to retrace. Then you can reposition. So don't be afraid to take profit and reposition. It's always going to be another setup. So you'll take profit, wait for a retracement. If the parameters are still the same, you can enter again. Same strike price, same expiration date. But it's a fresh contract now. You know what I'm saying? Versus all that risk being on the table at once. So you can sell one here, hurry up and wait. Well, not hurry up, but sell one at the first level. When it retraces again, because there's always going to be a retracement, right? And you'll buy into that strength, buy puts in that strength, and then it'll go to your next level, and then you take profit again. So this is our play. We are down. Like if you was here yesterday, I told y'all that the market went against us, and we were down this morning. It opened up down, and it went past where I said I was getting out at. Like it gapped down this morning. So we were down $70. I got out, and I got on the right side of the market, and I made 20 of it back. So instead of being down, here we go right here. So instead of being down 77, we're only down 55. Got on the other side of the market, and now I'm in this play over the weekend, and hope is not a strategy. I gotta take that out of my vocabulary when I'm talking about this. The probabilities, the chances are in my favor, but like I always say, don't over leverage, and you won't be so worried about the money. You'll be looking at the play. So the play says calls because there's a new high in the MACD. Let me show you. New high in the MACD on my trading time frame and in my daily, right? New high in the MACD just ticked up. So new high in the daily. That's what this morning did. So not only did it shoot through this resistance, it shot through this one too. And it closed above it. So now, in order to enter here, we need to look for a retracement. Remember, pullback, weakness in strength. It's a momentum divergence. So what did I do? It's my trading time frame. Didn't see no weakness when I got in. I didn't see any weakness, but it was in there. So I had to go deeper into my relatable. And boom, I found some weakness. Where was it? I think it was this red bar right here. One of these red bars, that's where I bought my calls. I think it was either here or it was one of these. One of these red bars, the little ones. is where I bought my calls. That's why I'm up $5 already, because once I bought it, the weakness in this strength, yeah, it was definitely one of these, because I wouldn't have bought one of these. This is too far outside of the Bollinger Band. Remember when I told you about the Bollinger Bands? So it was definitely one of these, right? So I'm shooting for $28 strike price, which is actually the next level is $28.76, but I picked the $28 strike price. $28. Look at that. I bust this level and came down and sat on top of it. So tomorrow, not tomorrow, Monday, I'm looking for this to go past 28 and hopefully make all that money back we lost today and keep pushing. Because like I said, we're going to a milli, y'all. If you want to learn how to swing trade like this, make sure you hit the description. The course is in there. I think it's, I got to put the new link in there because it's pay what you want weekend. So if you're viewing this on the weekend of October 7th, 2022, it's pay what you want weekend. So you can pay what you want for my swing trading course and have at it. Just make sure you leave me a review and we good to go. So with that being said, I'll see y'all Monday. Always remember, ain't no competition. It's only you versus you. See y'all Monday.